Good afternoon, everybody. Thank you for joining us on this glorious sunny day. Someone reminded me that actually it's a good day for cutting hay, so we mightn't have too many farmers on the line. I'm delighted to be joined by Carmel Logan and Colin Ryan to, I suppose, put some substance on the narrative in terms of the direction of travel with regard to, I suppose, very significant systemic reform. Connor, if you just move to the agenda, please. So I'm going to do a little bit of scene setting. For those of you who don't know me, my name is Ivan Gain. I am in my third decade with FitzGerald. I joined the firm in 1999 and run the new homes and commercial businesses. I'm also chairperson of Property Industry Ireland within IBEC. And within the council of IBEC, it's a mixed representation of professionals, funders, developers. I suppose we've been extremely busy over the last number of years, but particularly in the last number of months with regard to the next steps on planning reform. Carmel Logan is a long-term colleague of mine within the council of PII, is a tax partner and head of real estate within KPMG Ireland. I'm delighted to have Carmel here with us. So Carmel works across development, but also across life sciences, technology, has a very broad remit and well over 20 years experience in the space. So delighted to have Carmel along. Similarly, Colin Ryan is a director of planning with MKO, based in the West, but covering the nation, deep experience on energy, sustainability, environment, and housing. And we've changed the order around a little bit. So we're going to start with the NPF and finish on the tax. So go a little bit macro to micro. So we'll move it on there, Connor, in terms of context. As I said at the outset, we are witnessing, and to be fair to the previous government, solid foundations have been laid with regard to medium to long-term systemic reform. This is a graphic that we produced over the last number of years, and we're going to send out a little animation of this, which tries to explain the various different punch points and what we need to do to resolve and remove the friction from the system. So we need land availability, we need infrastructure, we need planning, and as a lot of our clients and developers would say, the building bit is the easy bit. It's getting through all the pieces on the left-hand side of the page before we ultimately get to the point of delivering for society on the right-hand side of the page. We turn over the page, Connor. There's so much noise. This is just some headlines in the last, since Saturday. So, you know, on Commission Planola, is it just a rebrand or is it something more substantive? Obviously, the whole matter of utility, water infrastructure, electricity, and the supply and utility that we have is very material to what we're going to speak to. But we are more confident in terms of the pace of change for the medium term. I think we've got some real challenges in the short term, but I think we are getting to a point at looking at a much longer term approach to solutions. So we flick over the page, Connor. And you know, I suppose it's worth reflecting on what has happened in the last number of years in terms of supply supports, demand supports, waivers of contributions. Loads of different things have been thrown at the sector, thrown at industry, thrown at society. But the piece that has been missing up until now is that long-term planning piece, and particularly the National Planning Framework, which is Colin is going to speak to. So we've lots of milestones achieved and lots more milestones to be achieved. Can I move on there, please? You know, again, the government have been very collaborative in the last number of months, and to say we are enthused by that. And over the last few years, I think there's really 4 critical documents that have been delivered in recent times. Obviously, the programme for government is really critical, and I suppose what we're hoping to see is this Housing for All 2.0 or something thereafter in the summer. The National Planning Framework and Department of Finance produced a really important report in terms of the composition and flow of financing for residential development and acknowledging that need for institutional investment in real estate and delivery of apartments in particular. And then finally, the report of the Housing Commission has some really strong and good recommendations. And I think these 4 documents aligned should give us a direction of travel. And there's a robustness and an evidence base to this, which is, I say, we're glad to contribute to. And I suppose really the purpose of today is to kind of stimulate that conversation in terms of how we can all contribute to the success for Ireland and for society. Just to move on to my final slide. And I suppose it's just to contextualize what we understand is about to happen, and having had good dialogue with ministers and senior civil servants over the last number of weeks. And Colin's going to get into the detail on this a little bit more fully. So the NPF has been finalised only in the last fortnight, and that sets out that long-term target and objective. We are expecting the Section 28 guidance to follow, and I suppose essentially there's two phases. There's 3 years left in the current development plan cycle, and then we move to the new Planning Act, which is a 10-year cycle thereafter. I've mentioned Housing for All 2.0, probably won't be called that, but we are expecting some reforms and changes, hopefully, with regard to rent pressure zones and tweaks around the edges of things like Croí and Star and other elements. Goodbody's did a really interesting report and a really robust review of current capacity in land supply over the course of last year. And they identified just under 8,000 hectares, which is zoned without planning, with capacity to supply approximately 417,000 units. The level of ambition that's there from government is to deliver capacity over the next 13 years, capacity for 80,000 units per annum, which totals about 1,040,000 units. So over the next number of months, and more so over the next number of years, we are looking at a long-term target, which will see a 250% increase in land supply. So at sort of 50 to the hectare, thereabouts, we are talking about something in the order of 30,000 acres to be rezoned for residential delivery. And that will have impacts, obviously, in terms of the land market. Some land will be more valuable, some will be less valuable, etc. But the sequencing and services and utility will be absolutely critical. So it's going to be case by case, county by county, and obviously the local actors in terms of local authorities and local councils will be really, really relevant. But the scale of ambition is enormous. It's positive. One could argue the headroom isn't enough, but the direction of travel is really good. So I'm delighted to hand over to the experts who can put some more endorsement on the detail, and we'll start off with Colin. Thank you.
Thank you, Ivan, and thank you to Sherry FitzGerald for the opportunity. And good afternoon to you all. You're welcome to today's webinar, and thanks for taking the time out over your lunch break. I guess my role in this chat this afternoon is to touch on planning matters with an absolute focus on the National Planning Framework. If you'll permit me, Conor, you might go on to the next slide. I will just introduce ourselves in terms of MKO. As Ivan mentioned, we're a planning and environmental consultancy. We are based in Galway with offices also in Dublin. We're the largest Irish-based dedicated planning and environmental consultancy. If you move on there, Conor, I can give you just an overview of MKO. We've over 200 people employed nationwide, and we have 14 specialist teams under the one roof. So in terms of project delivery and the planning process, we have it in abundance in terms of that expertise around planning matters, environmental matters, ecology, project management, and other specialist teams that, if you do get the opportunity, please do check in on our website. It's important to us in terms of how we represent our clients, and we're constantly working on delivery of that legacy that we are proud of in terms of the projects that we work on. So thanks a million for that just brief intro. So moving on then to the topic of discussion this afternoon, and there is no doubt, as a planner and a planner for over 20 years now, this is an interesting phase in terms of the planning process. We find ourselves with a number of, I suppose, crucial factors in terms of the future process around planning. We're currently in the midst of enactment of the new Planning Act. We're currently in the midst of residential zone land tax that you'll hear more about later. We're also in the midst of a really important policy review, and a key element of that policy review is the National Planning Framework. This National Planning Framework has just recently been adopted by government. It has been the subject of tweak, review, debate over the past number of months, but I think certainly from a planning profession and for all of us involved in the industry and with a focus around delivery of housing, this element of planning policy is crucial and is of significant importance. Some of you might ask the question, why is that and why is it relevant? Well, ultimately, this National Planning Framework sets out a long-term 20-year strategy up to 2040. and it has an absolute focus on the strategic planning of urban and rural areas and how local authorities will align with this national planning framework is crucially important. Some of the key elements within this national planning framework that will be of interest to you, I'm sure, are the facts that are located within it. It referenced 40% of all new housing to be delivered within the built up area. It looks at that remaining 60% of housing would be delivered on greenfield sites or the edge of settlements. So appropriate sites of appropriate zoning that can deliver housing on these focused areas. You will all, I'm sure, have heard the various media references in terms of the target of the delivery of housing, and that is approximately 50,000 additional homes per annum up to 2040. And in order to deliver or come close to this delivery of 50,000 units, we do need to see an increase in the number of planning applications for housing applications going forward. And that's obviously a role for us all and to participate in that process. But in order to move forward with planning applications for housing developments, you need to have sites that are appropriate, sites that are the subject of an appropriate zoning, be that housing or mixed use. So in other words, I guess there's next slide, please, Connor. Some of those key elements, again, within the national planning framework are to focus on these growth projections around the city, our cities, but also at county level. The population target and the estimated capacity of each settlement is an important key factor. And as I mentioned, that consolidation, so that compact growth delivery on areas that are within the settlement boundaries of our large towns and cities, and that the compact growth and higher density is an absolute objective within the national planning framework and one we all need to be mindful of. So with that in mind, it's very much important to be aware, and next slide please, Connor, that what does this mean for our local authorities? Now that the national planning framework, I guess the local authorities all across the country need to be mindful of the content of that national planning framework. And the national planning framework clearly mandates our regional assemblies and our local authorities to update where needed and where appropriate our development plans and regional strategies. So this, in other words, puts an emphasis on the need for appropriate land to meet the housing demand, for local authorities to ensure that they are aligned with the plans and the revised national planning framework and aligned with revised housing targets. So I have no doubt, and I suppose on a day-to-day basis, we would be engaging regularly with all of the local authorities across the country. There isn't a local authority that we haven't worked in, and there's no doubt that the planning policy sections of our local authorities are considering all of this information within the newly adopted national planning framework and what it may mean for development plans and city plans that they have just recently adopted in terms of the process. Next slide, please, Connor. So the next slide that I have here gives, I guess, a minister commitment that we heard on the 8th of April. The Minister for Housing clearly outlined in his statement on the 8th of April that he will give a direction to all local authorities to open up their development plans to rezone a very significant additional amount of land so that land is available for builders to build the homes that people need across the country. And to Ivan's point, that is a clear statement of intent by the Minister for Housing, but also has a significant relevance to our local authorities and to the adoption of the national planning framework as to how local authorities may move forward on the back of this clear intent from the department. So that was a statement back in April. As recent as Saturday last, the 10th of May, we were met with some further media feedback, and this was a screenshot from RTE News as of last Saturday, whereby, and I will quote the following, which I think are important. In this media article, Minister for Housing James Brown is to write to councils in the coming days requesting them to quickly identify land suitable for housing. Next month, the Department of Housing will issue formal instructions to local authorities, asking them to reopen their development plans and to zone more land for housing where appropriate. There is an ambition in government that local authorities will zone large amounts of land for housing within 18 weeks of receiving a formal direction to do so. So that certainly struck a chord with ourselves, and I'm sure will have struck a chord with many of you to see that, again, emphasis on the intent here around housing and what implications it may have for local authorities and for the development plan process. Next slide, please. So I thought it might be worthwhile just to take us back a step and for everybody on the chat here at lunchtime today to be aware of the development plan process and what is involved in a development plan process. And many of the local authorities have just recently concluded this very long and 5-stage process whereby it goes through a series of stages, preliminary being data gathering, stage 2 being a pre-draft or issues paper, stage 3 being a draft, stage 4 being material amendments, and stage 5 being adoption of the plan. So there is no doubt, folks, and an important point to make, I think, in terms of this discussion, that it will be interesting to see what does come from the department in the coming weeks in terms of that advice to local authorities as to how to revisit or open up their development plans. And it should be to everybody's interest that there is a mechanism within the Planning Act also to vary development plans where required. So local authorities do have that function. It would be remiss of me by not making reference to the importance of the elected members in development plan processes. Elected members or councillors have what's called a reserve function in adopting their development plans and plan making. So they are crucial to this process as well in terms of development plan adoption. So in other words, and in a very quick summary, elected members or councillors are given recommendations on maps that are current, for example, that are on screen, where it should be appropriately zoned or not. They are given that advice and direction by their executive and their planning departments within local authorities. And also the role of the Office of the Planning Regulator is crucial in terms of this development plan process, who, in other words, the Office of the Planning Regulator reviews all of these plans to ensure that they are aligned with the likes of the National Development Plan are being brought forward in the interest of proper planning and sustainable development. So that's a very quick snapshot of the development plan process. The next slide, please, Connor, and conscious of time. The planning policy review. So all of these documentation, and in particular, the National Planning Framework, is crucial to plans, for example, that I've shown on screen here, which are what we call zoning maps. And zoning maps are the subject of a whole host of lands being identified for appropriate and potential uses to come forward in the form of a planning application. So for example, the yellow lands identified in the maps here are for new residential opportunities. The green would be open space or primary amenity, and they give an example of what's involved in the zoning. So local authorities adopt these plans. Their core strategy figures feed into that, and these core strategy figures relate to population targets for each of the areas and settlements required. So it is going to be interesting to see what impact the new National Planning Framework has on these core strategy figures. And then, as Ivan mentioned already, we find ourselves currently in a 6-year development plan life, but on the back of the new Planning Act, all development plans now have to come up to a 10-year window as opposed to 6. So that would most likely lead to looking at where and what that might mean for core strategy figures and population targets for these particular areas. Housing target delivery of 50,000 per annum to 2040, as mentioned already, and the compact growth delivery around the 40% being focused on infill and brownfield, and the 60% at the edge of settlements. And it is absolutely important and crucial for local authorities to ensure that development plans have sufficient suitable land zoned for what will be a 10-year period, as opposed to 6, as to what we would have been familiar with in the previous regime. I'm coming to my last slide now, folks. I realize that I'm eating into my 10-minute window already, Ivan, but just matters to be considered. Infrastructure delivery is also crucial to these discussions and to the zoning requirements of land. Additional residential land, we await with interest what's called a Section 28 guideline, which will be issued to local authorities as to how, and a guideline around how they will deal with the newly adopted National Planning Framework and what proposed amendments may be needed to their already developed plans over the process. It's strongly recommended that we all participate in whatever review process may emerge, and ample opportunity is given to all landowners to be involved in proposed zonings. So certainly something to keep an eye on in the coming weeks, which will be of great interest to us all, I think, as we move forward to try and assist with, and I think that's an important point, whilst we're all involved in delivery and in the process, ultimately what we all want to achieve here is to be part of the solution towards delivery on what is a very, very serious housing crisis. So I think that's a sum up. Ivan, from my perspective, look forward to engaging in some high-level discussions and any queries that may arise coming forward. So thank you for your time, and thank you for listening.
Colin, that was immaculate timekeeping. Thank you very much. I suppose a couple of just quick questions that come to mind, and we were seeing some online in advance of the session, but zone land without services and the sequencing and timing of infrastructure delivery. And we have the NPF, but the National Development Plan is then to follow thereafter. Could you comment in terms of that? I mean, I think the fact we're changing to that 10-year cycle is really different this time around, that can follow over the course of subsequent years.
Yeah, absolutely. So infrastructure delivery is crucial to the successful delivery of housing, and it's an absolute priority and an absolute need. And I know we are about to hear from on the residential zone land tax, which will also be an interesting discussion. Many sites are the subject of being scoped in for residential zone land tax, and one of the crucial criteria for being zoned in for residential zoned land tax is the fact that lands should have sufficient infrastructure there to move forward to a planning application. So infrastructure is a crucial factor around not just a planning application process, which many of the listeners will be familiar with, whereby as part of lodging a planning application, you do need confirmation from the likes of Irish Water that feasibility connection is possible for the lands, and that's a crucial factor as part of your planning application content. But of course, it is also a factor in zoning appropriate lands. So the local authorities will certainly be taking into account when they look at their development plans, are the lands suitable for zoning? And one question they will be asking themselves, is there sufficient infrastructure in place, or is there new infrastructure about to come on board that will facilitate and potentially open up lands for future development potential? So Ivan, infrastructure is crucial to this debate, and the development plan, the National Development Plan, and indeed the priorities for the likes of Irish Water in terms of their funding mechanisms and where they're going to focus their funding streams in the coming years will be crucial to this debate also.
I think another point that came up in the rehearsals, if you like, was kind of around, certainly in this first wave, which is the variation of plans, it is around delivery. So, no one wants speculation in the land market. We're looking at a very material change in terms of the quantum of supply. There's carrots and sticks in this, and let's say we get on to Carmel now to talk about the stick. But I suppose the credibility of delivery in the short, medium, and long term, I think, is going to be really important. And I suppose the process of rezoning, the process of planning applications are bureaucratic and challenging. Hopefully that will get a bit easier. But equally, we're going to have different local authorities approaching it differently in terms of the level or percentage increase they require. And then I suppose variations, like some counties have white zoned lands, some will be more, much more focused on economic or industrial lands for rezoning. So it's like, whilst there's a national directive at a local level, as I say, local elected members, but county managers, it's going to be very nuanced on the detail, isn't it?
Yeah, for sure, Ivan. And I think that's the whole delivery is key to the discussion now. Carmel will go into the residential zone land tax and the nuances behind that. Delivery is a factor for that too, and the onus around that. But certainly we have seen, in terms of our engagement with many local authorities representing our home builders and developers with local authorities through that pre-app process. And all local authorities do want to know the realistic time frame around delivery, around projects, around is this likely to come forward for a planning application process. So intent is crucial now and very, very important for that keyword. And I think it's a word that, if many of you could take away from the webinar in terms of discussion, and this really needs to be a focus around delivery of housing units. Of course, Ivan, you identified the challenges around getting to the point of delivery, but we need to be able to demonstrate to local authorities and possibly others outside of that there is real intent around delivery of housing units on appropriately zoned land.
Brilliant. Thank you very much, Colin. Carmel, over to you, please, on the detail and that big stick, as we refer to.
Thanks, Ivan, and good afternoon, everyone. As Ivan said, I'm a partner in KPMG in the tax practice. KPMG has the largest tax practice in Ireland with over 800 tax professionals. And as Ivan said, I work with clients across all facets of the real estate sector: developers, funders, home builders, service industry, the whole suite. And I also work with clients investing in Ireland in tech and life sciences. So while there's a lot going on in the real estate world, that world is a little hectic too, right? Today I'm going to give you an overview of RZLT, residential zone land tax, and then pick up on a few other tax elements as part of the discussion. So you might ask, look, why are we talking about RZLT? It was introduced in 2021. It's been there for a while, right? It was introduced as a housing for all measure, and as Ivan alluded to, it's the stick that was supposed to support land activation, right? It's a new annual tax to activate vacant land for residential purposes, and it was supposed to replace the vacant site levy, which hadn't really got off the ground given the number of exemptions and nuances to that. The legislation was largely enacted in 2021, and we've had some tweaks in 22, 23 and 24. As Colin and Ivan alluded to, we've had a series of maps published by local authorities, and we're now in 2025. We had the first liability date being 1 February, and the first tax return and payment date is on the 23rd of May. So with that, I suppose that's causing a renewed focus. The annual 3% tax is based on the market value of the land suitable for residential development, which is adequately serviced, as Colin and Ivan have mentioned. And I suppose that's a reasonably big charge, right? Particularly if in the life cycle of a development, there was multiple charges. So understanding, I suppose, when it applies and the nuances around the exemptions is key. Revenue have recently issued a whole raft of new and updated guidance to deal with the fact that the first returns are due, that you need to register a site, all of which are online through their Revenue Online portal. And in fairness to them, the guidance for operating on their user manuals are quite user-friendly for anyone who's trying to grapple with the registrations. So maybe just go on to the next slide, Connor. Maybe just a brief overview of what it is, just to look back. So as I said, it's an annual 3% charge on the market value. It's administered by revenue, but the local authority is key because it's the owner of the maps. Market value is a capital gains tax definition. So it's willing buyer, willing seller, and there's no account taken of viability. So even if you are sitting on a site that you cannot develop at the minute because it's unviable to do so, which we know there are many of those in the country, this tax potentially arises. The market value is rebased every 3 years. And as you'll see later on in one of my slides, interestingly, the market value is going to be visible on a central database disclosed by revenue. We don't have details of what that's going to look like yet or whatever, but as they emerge, we can share them in due course. So when does it apply from? As I said, it applies from 2025 if your site met the relevant criteria on 1 January 2022. And broadly then you have a 2 to 3 year lead-in time for when the charge will arise, right? And the idea is, I suppose, in a full cycle that you get zoned, you get planning, and you commence on site within that 2 to 3 year window. And if you do that and you complete the development within your planning permission term, a charge to RZLT shouldn't arise, right? So that's the theory. I suppose in practice, we all know where we've come from in relation to the planning system, the current funding environment, the current rent pressure zones. That timeline is challenging for many. So there will be lots of scenarios where there's unintended or unexpected charges to this tax. The scope of the remit is extremely broad, and it covers all land zone for residential use, including mixed use, where it's reasonable to consider might have access to services. That kind of reasonable to consider test is quite subjective. And as companies have gone through and landowners have gone through looking at the maps, it's an area where there's been a number of appeals with limited success. You know, I think it's somewhere where perhaps we'll see things evolve. You guys mentioned the Section 28 guidelines. We've seen the recent press in relation to Isca, Éireann and connections. So as all of those evolve, and we end up in a scenario where there's clearly going to be a lot more land going on maps when there's another 30,000 acres to be rezoned and 60% of housing is going to come from greenfield or edge of settlement. There's going to be a lot of moving parts and perhaps that'll get some more focus. There's limited exemptions and deferrals. And I suppose in theory, this is an activation test. So they don't want there to be lots of deferrals. That's one of the reasons why the vacant site levy didn't do its job when they're looking at it from a policy perspective. They don't really see this as a revenue raiser. It's supposed to be a mechanism that's penal to activate the land. There's fairly prescriptive timelines for mapping process. We're kind of in the stage now where we had draft maps and supplemental maps, etc. So based on the legislation, we're in a scenario now where there's an annual map published. And if you're on it, apart from really if you want to apply for a change of zoning of your land, which isn't, you know, I don't think massive of that is expected given where we want to get to in terms of rezoning land, you're on the map and you could have a liability. You're going to have additional annual cash flows to be thought about in development budgets and new compliance requirements. And look, on top of all that, you don't even get a tax deduction if you have to pay the tax for income tax or USC or corporate tax or CGT. So really, you know, I think most significant landowners have considered this, but I suppose it is an annual test. You have to look at the map annually to make sure that whether your land is on it, and if you are, you need to think about it. You know, look, maybe just to touch on some of the practical challenges we've seen with this before we move on to the decision tree. It's you know, inconsistencies with mapping has come up, unusual scenarios caught. Ivan mentioned myself and himself are on Property Industry Ireland, and through them and other industry bodies, there's been a number of lobbying efforts to try and improve the system to deal with industry norms. A lead-in time of 2 to 3 years is pretty short. In a best case scenario, you know, you've got the design phase, you've got the planning phase, you've got pre-commencement phase, and they don't really take into account industry norm in terms of timelines. We have had some improvements on foot of submissions. We've had an exemption for judicial review, and then time to get on site post planning. So you know, we've had some success. I think we'd like to see more. And hopefully this is, moving on to the slide that's on screen, hopefully this is a useful decision tree for anyone who isn't overly familiar with the rules to work down and figure out when you might have a liability. Starting point is, are you on the map? Then think about, are you in the scope of local property tax? Then think about, do you have exemptions or deferrals? And if not, then think about when the relevant criteria were satisfied, and that then will drive when you have your first pay and file deadline, noting that if your site is on the map, you have an obligation to register it as a relevant site. If you go on to the next slide, Connor, maybe just pull out a few things here. The return is detailed. You can see on the left-hand side the types of details that are going to go in, and the ones with the asterisks will be published centrally by revenue. Understanding, I suppose, who is the owner of the relevant site, and particularly where there's multiple owners and which person has the obligation to file is important. And I think as part of that, this compliance process, as people are starting to think about either selling land that's potentially on the map or in scope, or thinking about registering those sites, all sorts of practical considerations are arising where, you know, your title hasn't fully been updated on the register of titles, so you're not the registered owner. So there's some tidy ups and you know, splitting sites and folios into things that are on the map, not, etc. So lots of apportionment needed. Other point to note, I suppose, is that there are interest and penalties if you don't pay on file on time. The interest is about 8% per annum. And also then, if you undervalue the property for the purposes of the tax, you can have a surcharge of up to 30%. And similarly, a third surcharge can arise if you late file the returns. And I suppose where the rubber will really hit the road on this is when you are trying to sell the property or sell the land. It forms a charge on the property, and therefore, as part of any conveyancing process, the Law Society have now, I think it's requisition of title number 45. There's another 10 or 12 questions linked to RZLT, which will factor in any sale completion process, which need to be factored in. If you go on to the next slide. That's just some simple examples of different scenarios, and you'll see that the reason I don't say it's a 3-year lead-in time is it can be as short as 2 years and 1 month, just depending on the dates and the interaction between the date that you are on the map and serviced, and then the date that the liability date is defined in the legislation as 1 February. So there's just some practical examples on that slide. If you flick on to the next slide, Connor. I don't propose to spend a lot of time here. This is just, you know, when are you on a map? Left-hand side is what's potentially in scope. The middle is what is defined in the legislation as being infrastructure and facilities available. And then the exclusions are limited. The ones that are probably worth calling out is the first one, which while when you read it, you think that it could cover a lot. As I understand it, it only covers statutory phasing. So I think that's lands that are in the strategic residential reserve or phase 2 in planning terms. I've had to learn an awful lot more about planning terms than I ever thought I'd have to, as someone who worked in tax over the course of the last few years. If you flick on to the next slide, Connor. So I suppose you're on the map. It's zoned. The question is, you've hit the liability date. The question is, do you actually have to pay the liability? And there's a limited number of exemptions, deferrals, and abatements. It's, you know, while there's a lot of items on the page, they're all fairly nuanced and fairly involved from a condition perspective to actually meet them. So it's I suppose it's making sure you consider them all carefully. And what I will say is that it is likely that if you think an exemption or a deferral applies, basically you will have to file a return to claim it. Right? So they are using the return as a mechanism to understand, I suppose, and as a tracking mechanism to understand what's in the system and being deferred. If you flick on to the next slide, there are probably 5 or 6 areas that when you stand back from this, they're the key things that you need to think about. Probably key things to remember in terms of takeaways. If you have land that is zoned and idle, that's going to erode your 2 to 3 year lead-in time. If you're in the pre-planning stage, there's no deferral available. That's in your 2 to 3 year window. If you're actively seeking planning, there's no deferral available. If you actually are on site, then there is a deferral available in the course of the development, but you have to make a claim. Completion, this is all about delivery. So really, if you don't want to have a charge, completion within the planning timeframes and the full amount that's deferred never falls due. Challenges with viability, as I touched on earlier, there's no exemption and the charge potentially still accrues. And then thinking about practical things, one of the things you guys touched on earlier was about planning permissions and extensions, etc. Is it a new planning permission? Is it an extension of an old one? It can have different implications. So look, you can't ignore this. It could be a real cost, and 3% of market value, if there was multiple hits, is potentially a significant cost. Given the challenges with the planning system and viability of schemes and rent pressure zones, there is a real possibility for charges even in a normal window. The main basis for deferral is getting on site. And you can understand the logic for that if they're trying to force delivery and development and activity. But 2 to 3 years is pretty short. And look, I think probably on future land purchases, ask yourself, has someone else used up some of my 2 to 3 year window? So if the land, site transfers and it doesn't necessarily mean you get another 2 to 3 year window. Someone else can use yours up.
Carmel, thank you so much. I'm conscious that we've 3 minutes left, and I'm sure people want a little bit of vitamin D if they can suck up the rays for a few moments. But you've covered a lot of detail, the RZLT. Is that it? The land value sharing tax seems to be on pause, or what's your sense on that? I know it's a program for government, but...
Yeah, look, I think I'd say you'd like to think that RZLT, that's it, and anything else will be positive in terms of improvements, but they see it as an activation measure, so there could be a stick, and the minister did allude to the fact that they could increase the rate if it wasn't working. I think on LVS, it's been deprioritised for now. It's not in the legislative cycle. It probably hasn't gone away, given that there's heads of bills out there. But I think we'd encourage, that it's not legislated for in maybe 25 to 2030. We need to get things moving, and there's a very significant tax take already, so that really won't help viability on transition as we get from where we are now to the ambition of the 1,040,000 homes that you mentioned at the start, Ivan.
Yeah. I'm really conscious of time. We've a minute to go. Just to say a massive thank you to Colin and to Carmel. Really, really insightful. We wanted to do something short and sharp, just sort of set the scene a bit in terms of what's coming down the tracks. The whole area of viability, it's back to what we said at the outset. It's rent pressure zones, it's other taxations, it's getting things working. There are lots of supports thrown at it that are a bit misaligned. So I suppose that's really a topic for another day. If you need advice, ask an expert. We do hope to do more of these webinars and seminars to kind of inform people around the pace of change. But there's a real urgency around that. It's a real urgency about getting advice. And there's opportunity, but we got to lean into something that's very, very significant. And hopefully we can deliver those homes that are required for today's society and our collective kids and all the rest of it. We've colleagues in different provinces who are on the detail in terms of that sort of land strategy more fully. But I think we're in for a fairly fascinating H2 in terms of that policy alignment. And look, we're optimistic on this bit. From a planning and legal perspective, there's enthusiasm that's what's been set out is going very much in the right direction. And as I said at the outset, the short-term challenges are well understood. The viability of apartment delivery, those challenges are and need to be tackled really urgently, because this is going to deliver in that kind of medium to long-term scenario, and we got to dig deeper straight away. So there's our carrot and stick. I'm going to finish in time. And thanks again to Colin and Carmel and my colleagues for organising, and thanks all for your attendance. We will be sharing the slides, and we will be sending on a recording as well. Thank you very much.